Let's go through an update in the portfolio, and we're going to dive into some of the stocks that we've been looking at. We can see that it has pretty much turned around from red from the previous update. I did one around a week or week and a half ago, and now we have turned positive after a few months red while the market has been going down and so many different things going out in the world. So my name is Novo Nielsen. I'm an investor, but also a software engineer. That's my main job, but I've been investing for the last 10 years. So the main stock that we're going to cover today is Novo Nordisk. I've also been doing very great in HIMS. Going to create a follow-up video on HIMS where I go into details of all the different stocks that I'm buying. I'm buying in the healthcare sector. It's down a lot. It's starting to turn around. The SaaS sector, the technology sector, it is pretty much just crashing down. ServiceNow today is down 15% on earnings, even though they had pretty good earnings, but there are some concerns about margins going a bit down while they're doing some integrations of acquisitions that they've done, but I still think it's a great long-term opportunity. We have some Bitcoin, we have some other stuff in here, but now we're starting to turn plus. We're already up like 50% on HIMS in just a few weeks pretty much, and I think it can go way further. So it has taken over Novo on the first place, but the one that we're going to talk about is Novo Nordisk. So Danish company, I'm a Danish guy, been investing in Novo Nordisk in the early days when I started my investing career like 10 years ago, together with my dad. So I was pretty much just investing with him since I was 17 years old. In the start, I was Novo Nordisk, then was pretty much out, usually only investing in the US market, maybe a few companies outside, but mainly the US market. But now I picked up Novo Nordisk because it has a huge disconnect with the fundamentals and also the stock price, so we're starting to see a great opportunity. I'm trying to implement, it sounds very simple, be greedy when others are fearful and fearful when others are greedy. This is the best quote and the best way that you can invest from Warren Buffett, and it sounds very simple, but it's not easy to execute because it pretty much means that you have to go against the masses. So when everything is going down, everyone hates the companies, you need to be in there, be able to spot opportunities, be objective, and really just put your money where your mouth is, but also just what you think and not what you feel. So this is very important. If we take a look at the sentiment, it's starting to turn positive now. It has been negative for a long time. It is starting to turn positive, but the price has not been following. So we have a very strong indicator in here that we have a disconnect. The fundamentals are great. The valuations is also undervalued in this software. So this is the stocksentiment.io, where I pretty much just build out my full investing system and just the tools that I'm using to do research and find new opportunities. It's pretty much just set back like 4 or 5 years, Novo Nordisk, before the GLP-1s. It has embraced that. It's the biggest company in the insulin space. So for type 1 and type 2 diabetes, they also got into Wegovy or Ozempic, those injections. Now they have the oral form as well. So you can just take a pill every single day and you can achieve weight loss too. The reason why it's down is because they're facing competition from Lilly. They're pretty much just eating their lunch right now. Two biggest duopolies in the market, but again, there's not only one player that's going to take it all in this market, because the market is growing like crazy right now, and it's also going to do that in the future. Like the obesity market is not going to slow down anytime soon, especially not with the fear of AI taking over all jobs and so on. Like, what are people supposed to do if AI is taking over all the job? Like, they're just going to sit at home, scroll, entertainment, social media, and that even more. Probably some people will start to sport more, but I think the obesity market is still just going to grow like crazy, and it's projected to grow one of the fastest sectors. Probably only AI that's going to grow faster. So I'm looking mainly into the sentiment and then the fundamentals and try to find disconnects there. So we see that mixed sentiment on Novo reflects value buying interest at 11 PE. This is very low PE ratio. It's just 2 years ago, it was like around 40-50 PE ratio. So it's pretty much just been cut down like 70-80%. So undervaluation at low PE, trial success beyond obesity, competition from Lilly, and then we have 2026 revenue guidance concerns. There's a few concerns here, but I'm going to address that because this is the main concern. Competition from Lilly is coming too, but the pill that they have, the Wegovy pill, is better in studies compared to the Lilly. And they also had the first mover advantage. They have crazy buybacks and also very good dividends. So you get around 4.5% dividend, closer to 5.5% dividend right now, while you're just waiting it out. So this is also just a very good way to like beat inflation while you're pretty much just waiting for a stock to turn around. It can easily double without really causing any damage, or anyone would pretty much notice. So here's some key factors. Like, it's pretty mature, so it's in the mature stage. It has strong profit margin, 33% of profit margins, even if they have to give up some margins to expand the market. Like, just having 30-25% profit margin consistently is very, very good. They're starting to integrate AI into it. They announced the partnership with OpenAI to use AI for drug discoveries and trying to shorten the timeline for getting new products out there and trials. Earnings growth accelerating, that's good. We have 4 PE versus sector, PEG ratio, but the main one is revenue growth decelerating. So they're cutting prices like crazy now on their weight loss medicine, but there's a reason for that. First of all, they're getting pressured to do it. Second of all, they're trying to unlock a bigger market. So right now, around like 20 million people is using these weight loss medicines, but the whole obesity market is 2 billion people, and it's only going to grow over time. So that's less than 1% that they have actually captured of the market. This is a huge market, but the problem is that if you have to pay $500-600 for a Wegovy injection every single month, you're not going to have a big market, and it's very, very limited for who has access to that. So now they have cut it down $150, even cheaper, like around probably $25 if you have healthcare insurance that covers it. So the US market is definitely the biggest one, so that's also why it's causing some problems there with the Lilly competition, but in general, they're doing pretty good. There are some concerns about patents expiring out in the future, but again, I think like the very big markets, like the developed markets, like people that it's able to afford like $100-200 medicine per month, I still think that they would prefer like FDA approved medicine and something that has been researched for a longer period of time instead of compounded medicine. So this is the key signals, the key reasoning about Novo Nordisk. Just a quick summary over why is it down. We see the revenue growth going down. It's actually like turning a bit negative. At least that's what they're guiding for. I think they will beat the guidance pretty much. I think they will probably be close to 0% growth, but that's while they're lowering the prices, getting ready for that, and just expanding new markets and accelerating in that way. So even though if it takes 1 or 2 years to turn it around, try to re-accelerate through expanding the market, and it just keeps strong profit margins, then the revenue, like the reason why the revenue is going down is because if you sell at 600, now you cut it to 150, you're going to make way less revenue and also profit. But if 3 people is buying it instead of 1, then you pretty much just have all your revenue and also all your earnings back. So it might take some time. I'm okay with that. I'm a long-term investor. I'm looking out 3, 5, 10, 20 years, and pretty much just, as Warren Buffett is saying, like if you want to hold something forever, if you want to be a long-term investor, the best way to pretty much project it out is to look back in history. So if you go back in history, how has it been to hold Novo Nordisk forever now? And if you've been holding it for 40, 50 years, like you made thousands of percent. So that's pretty much it to it. Like again, 70-80% pullbacks, that's pretty heavy. When you get opportunities, you just gotta swing. Like you don't have to get every single thing wrong, but if you get such opportunities here, for me personally, I have to take a swing. I don't really have to go down into like 3-digit decimals. I don't have to go fully into the business, understand every single drug they have in their pipeline, because if you have to do that, it might not be a good investment. It should be so obvious just going over the key things here. So the key metrics, PE ratio of 10.11, forward PE still 11.5, even with the cut down guidance. We have almost 5% dividend. It came down here pretty much not at a huge market cap anymore. Return on equity of 60%, profit margin 33%. This is like crazy fundamentals for a company, even if they're getting down slightly. So there's some earning highlights. It also tracks that just to keep track of the history of what are the companies promising, what are they talking about, what problems are they trying to solve, or what problems do they have, because a lot of companies out there, they don't talk about their problems, and this is one of the most important things for investors, is talk about the problems that the businesses have, to be transparent with the investors so they can make decisions based on all the information that they have. Because if any company out there is not talking about the problems, they're pretty much just lying or hiding something for investors, and that's not a good sign from the management. So I would way rather have and even take a beat on a stock where the management is transparent, because then I can use that information to make my decisions, compared to just being in uncertainty, not knowing what's going on, not knowing what problems are they tackling, and how are they trying to solve the problem. That's just as important, like how they're trying to solve the problems that they're facing, because then I can think about, do I agree with the problems they're trying to solve? Do I agree with the direction they're taking it? And would this be the same way that I would solve it? But again, it just all comes down to, if we go in and take a look at the sentiment, you can see the sentiment is pretty much just going up now. People are starting to forget a little. Most people that probably was on the down, on pretty much when the stock went down like 78%, most of them has probably just given up or forgot it, like closed their account, not looking at it anymore, or at least not crying on X or Twitter. It's getting Reddit, Twitter, all different news articles out there, so it's starting to go up now. It's starting to get more positive. They had that partnership with Hims. Amazon has launched that they're going to sell the pill and all those things as well. So it's starting to go up here, which is very positive, but the stock price is not really following it. You can see the key metrics. You can see the social media post that it's basing it on. You can see the week by week summaries. What are the different highlights for each week for the stock? Like, this is very, very useful for the stocks that I'm tracking, because you don't really need to sit out there, like look every day, look at the sentiment, look at all the news coming out. You can just go in and say, okay, in March, the week of March 23, FDA approval for higher dose of Wegovy, persistent concerns over 2026 revenue guidance decline. So just get a few bullet points that you can use to stay up to date with your stocks, and that's why I built out this stock sentiment analysis page, which is pretty much just a research tool. Fundamentals, it's also pretty cool. We can see that earnings per share is going down slightly. Stock price is going down. We can see the profitability. Operating margin also crazy good. Return on assets also very good. So this is some strong numbers. And then I'll usually just look at the graphs here. So if we zoom out, maybe if you look at a few quarters, it has a few bad quarters in 2025. Now it's re-accelerating a bit here towards the end. And it's going to be interesting in Q1 here of 2026. But if you just look at it on an annual basis, which I'm usually doing because I'm looking at it long term, we can see that it's growing pretty nicely. So this is before the GLP-1s. They have been growing like this with the new GLP-1s, but the stock price has been cut back all the way to 2021 before they accelerated the revenues with GLP-1. So you're pretty much just getting the company before they came out with the GLP-1s. So they've been growing. It's not like they make less money. We can take a look at that at the free cash flow per share, because over time, stocks and stock price, it follows free cash flow per share. There might be some disconnect for some months, even years, but eventually it will come back and track free cash flow per share. So if you take a look at the annual cash flow per share, so we can see they have some big capex spending here. They're probably setting up new plants and all that stuff, but we can see the green one, which is the operating cash flow. We can see the blue one, which is the free cash flow. So while the free cash flow has been going up, the stock price has been going down. This is a very good indicator of that there is a disconnect as well. So we have bad sentiment, we have good fundamentals. Also, I like to just think about the future. I don't need to take it down to 3 decimals. Go in, every metric has to be perfect, because if everything was perfect, like, it will probably not be down. But we need to look at opportunities. We need to figure out where are the opportunities, where we need to take our swings so we can perform over time. Maybe Novo Nordisk doesn't turn out to be good or profitable. Maybe we take a small loss. But if we do this consistently with stocks over and over again in similar situations, we'll make a ton of money over time, because once these stocks turn around, like, you're going to be able to see 300, 400, 500% gains in a few years. And if you just hold it for 10, 20 years, like, you can pretty much not imagine like how big of a change that can do, and it will make back for any other investment that you have lost money on in the past. So we see stock buybacks, they're accelerating those. This number here is definitely not updated, because they're re-accelerating stock buybacks and buying stocks back every single day. And this is also without stock-based compensation. So compensated for that, we can see this shares outstanding over time is going down, and they're being even more aggressive now in 2026. See free cash flow per share going up, taking a hit here. Looks pretty solid across the board, like all the metrics are still going up. Maybe it will start to plateau out now while they're in the transitioning phase, expanding their addressable market, and I'm okay with that because I'm getting it at a good valuation with a good margin of safety. So I could say the same here if the stock price was back at like $80, $100, but you would not have a good buying opportunity. You would not have your margin of safety in case something goes wrong. In case something goes wrong now, I'll probably only lose 10-20%. I can move on, but I really don't believe that this will be the case, because it's just a huge disconnect we're seeing now, and people thinking short term where you should be thinking long term. That's where you make opportunities. That's where all the value is, and everything short term is just noise. People, they act so much on emotions, selling out stocks, buying stocks. Like, if you can just sit back, make objective decisions, don't go too deep into the companies, it's not a good, like, I will keep saying this in the videos, like, it's most likely not a good investment if you have to take it down to 3 decimals and really just sit with a loop and try to find every single thing. Look at the company, think about the future. Is this company going to be taken over with AI? What could happen? So the obesity market is going to go down or totally crash. Is all people just going to be healthy? Is this not needed? What is the products that they have in the pipeline? Is this something that could be relevant for the revenue in the future? And then you can pretty much just think about it, and it's way more just a feeling, because we have the margin of safety, so it's just a feeling of what do you think in the future. And when I'm thinking about software companies, like all the AI fear and all that now, healthcare space, all these disruptions that's going on, and usually short term is just hype or fear that's driving the stock price, and eventually it will revert back to the mean. So that's also why I'm looking at some of the weekly moving averages. I'm comparing it against its own history. You can compare it, most softwares out there compare it against the sector, but I'm comparing it against its own history, because usually I'm investing in like a bit higher beta stocks, like technology stocks, healthcare stocks, like disruptors in the healthcare space, or just very cheap healthcare stocks, and they would not be trading anywhere near just the normal sector. Because if I were investing in those companies, Coca-Cola and all those, I'll just buy the market pretty much. P ratio against itself, P ratio, 4P, cheap, price to book, fair, price to sales, cheap. So I'm comparing it against its own history. You can see the valuation trends, technicals. I'm really also looking into the moving averages. 200 weekly moving averages is all you did was just buy companies under or at their 200 weekly moving average. You're probably going to do better than the market, or much better than the market over time. So even just to get back to the 200 weekly moving average, we're looking at around 160% gain. So this is deeply oversold compared to the fundamentals or the valuations, and we have the earnings in here. So you can go through each earning transcript. We have the AI agent going through them, doing summaries, tracking how they're solving the problems over time. Are they addressing the issues in the next quarters that they were talking about before? Have they solved some of the problems? So this is some of the key risk and the guidance track record that I'm doing in here. If it's in line, if it's not in line, if they're not addressing it anymore, if it has been solved, and all those things. So this is very, very important. This is what I'm going through. But Novo Nordisk is a biggest position in my portfolio. If you just go in here, I think HIMS just took over, but this is just my public one. We can see the performance over time. I started this when I started the YouTube channel, or started to build out the software system. We can see April 13, I made that video. It's really, really good that I made that video where everything was down when I bought the stocks, just to document to you guys that you should just be buying when the stocks are down. When you're getting good opportunities, everything can turn around so quickly. I was around 12% down at the max, and this is again because I'm just buying the companies at a good margin of safety. I'm not holding them down. Like some of the stocks is down 50, 60, 70, 80%, but I'm only down like 10, 20% because I've just bought them more recent and when they became disconnects in the market. Because you can buy like Tesla, Palantir, all these companies where people say the fundamentals doesn't matter, but at the end of the day they do matter. And you can buy a great company and you can lose a lot of money, and you can also pretty much, like, it doesn't have to be a good investment just because the company is good. Like you can buy a great company and it can be your worst decision, worst investment in your life. Like some people, they were buying Tesla at 400 PE in 2021 at $400 as well, and the Tesla stock pretty much crashed 75% down to $100 because eventually, like, the fundamentals, they did matter. The same with Palantir. There's no, like, these are the most extraordinary companies that has been in a very, very long time. And again, people thought that there were an exception to the rule, but at the end of the day, there's never any exception, and there's never been to any stock in the stock market. So make sure you find disconnects, make sure you find valuations, and then you buy great companies at good valuations. You don't buy great companies at expensive valuations, because again, you don't have a good risk reward ratio then. So we can see Novo Nordisk 20%, 24% in HIMS. We have the sector distribution, technology, financial services, and healthcare. I'm pretty comfortable with this portfolio, and this is just my public portfolio. Then I have my private portfolio with pretty much the same distribution. I have a few more stocks there, but this is the ones that I'm that I pretty much just built out based on my software and the system that I'm following. So this is pretty much representing how I'm feeling about the market and the different companies and where I find the biggest disconnects. So this is pretty cool. We turned around 12%. This was 13th of April. Here, not even like, this is like 1 week after we are plus 5%. This is how fast it turns around. This is why we should buy stocks when they're crashing down. Still tons of opportunities out there in the market. The market is now back to all-time highs, but there's still crazy opportunities out there, which is not following the market. So it's just very important to really understand cycles, where's the market heading, valuations. And once you have all those fundamentals in place, you don't really have to base your investments purely based on that. You just need to know it to be able to have them as parameters or variables in your decisions. But I just like to think more about the future. What do I feel about software? Is it really going to be taken over with AI? I'm going to cover that in another video, because I think there are some good opportunities in that sector as well. Hope you learned a ton. This is really cool. Hope you learned a ton. What do you feel about the market? Do you have some good opportunities? What do you think about the companies that I have here? Is there something that I didn't know about Novo Nordisk, or something that I didn't address? Leave them down in the comment section, and then stay tuned for the software video where I'm going to drop ServiceNow, Adobe, Duolingo, the most hated stock in the market probably, Salesforce, CRM, all these guys. We're going to cover that in the next video.